Welcome back. It is Friday, end of the week. Thankfully, hours filled Monday and Fridays are good times to take a look at the YieldMax funds, their positioning, how they're moving their positioning around. So I want to touch base on that, specifically on the 5 most held funds, see how they're moving, how they're positioning for the week ahead. But also, just a quick look, YieldMax has a lot of funds. I've been updating the site, of course, to include in-depth information for all the funds. Still got a little bit to do. But once I get that finished, I'll take a look at adding some weekly stats, see how those funds are doing in the YieldMax area. And then I will move to some of the newer other fund areas, Roundhill. I got them all, actually have a lot of them listed on my home screen here. I want to take a look at Roundhill, Curve. You got the JEPI, JEPQ, Global X, Amplify ETFs. There's Defiance. There's a lot more of these. So lots of stuff to do, of course, but I like to pull the information and let you see it real time, how it's, and then hopefully break down some stats that maybe you don't see elsewhere, some visualizations that you don't see elsewhere that allow you to better understand the investments. But as far as YieldMax is concerned, I just want to take a look. So if we filter based on percent return for the most recent month, taking the distribution divided by the share price or recent share price, if you're a new investor looking to get the most bang for your buck and just using the past month as your tell for what's going to be paying a lot, you can see these are some of the top funds that are paying right now in terms of a percentage return. This could, of course, be skewed, but if there's some earnings event or something that increased the implied volatility for the week, that might have had an artificial, or maybe not artificial, but a one-time boost to the percent return. But overall, I think this is a pretty good list. You got SMCY, Snowy, Misty, Kony, and Huey, kind of like your top 5 in terms of percent return. I feel that's a pretty good list. I don't see anything that's jumps out to me as something that's not necessarily true. Maybe Snowy will fall back a little bit. If you look at the top 10, then you got Maro, Gooey, XYZY, Carvana, and TSLY. Once again, I think a pretty good list. The only outlier, I think, is Gooey. That was a fantastic dividend that it paid, at least relative to its past performance. And Gooey's actually been a pretty strong performer as of late for those interested in looking at some of these other options. But as far as a total return, once again, not apples to apples, because some funds have been out longer than others. Can't get this to work. There we go. So not every fund has had the same amount of time to try to stack or snowball their distributions and basically let the fund work. But from a total return perspective, I will say this is assuming no reinvested dividends, just basically taking the distributions and then storing them in a checking account with 0% interest and just adding those to what the current ETF price is. You can see that, I guess, your number one here, you got Misty, of course, and then NVDY, PLTY, Coney, Huey, your top 5. Basically, what I pull out of that is most of these funds have been pretty good, but mainly if you want to do well in these funds and you want to have a fund that's returning this percentage, it seems like buying the ones with the high implied volatility, at least for now, have been the way to go. You get that increased dividend from the implied volatility because you can see all these names, MicroStrategy or Strategy, Nvidia. At least when it first came out, Nvidia was very high volatility. Palantir, Coney, or Coinbase, and Robinhood, all very high volatility. And then if you look at the next 5 or so in the top 10, these are just your big tech cap, basically stocks: Netflix, Facebook, Amazon, Microsoft, Babo, or Alibaba. Alibaba's been good of late, with the Alibaba stock, of course, doing quite well lately. But yeah, these ones, I would say not as big of a distribution, but you can see based on your ETF price, all of them are, of course, slightly down from what they came out as 20, but they really haven't been big movers. So these are just your kind of, I would say these are for investors looking for that pretty good distribution, not necessarily the best distribution relative to your top ones here, but an ETF price that doesn't necessarily move around or doesn't have the same volatility as some of the other ones. And you can let me know what you think. That's just the things that jump out to me. I look at how these funds have performed overall. But jumping into it, I guess that's the top paying funds and the best funds so far. In terms of our overall market cap, we're still pretty similar here. We got Misty, the top, 4.6 billion, Nvidia, 1.8 billion, Kony, 1.4 billion, TSLY, 1.2 billion. TSLY's actually been pretty good lately. And then finally, Palantir at 670 million. So you can see the top, these funds are definitely driven by the top heavy. A lot of the other funds, if you added them all together, all these other funds, I don't think they even approach Misty. So just as a note, Misty is guiding the fund. It'll be interesting once I add the weeklies, and I know Ulti's got a multi-billion, I think the last I checked was multi-billion-dollar market cap, or not. Did I say Ulti? Yeah, Ulti's got a pretty large market cap, but it'll be interesting to see like where YieldMax and YMAG fall into this in terms of a sizing perspective. But jumping in, I guess I'll start with Misty. I looked at Misty as far as positioning. This going forward here, I want to cover the top 5 just in terms of their positioning. For people who are investing in these funds, kind of what's going on with the fund. I got this previous iteration, so I like that. So here's the Misty positioning right now. First thing to note, Misty overall, there's no credit spreads. We're just selling calls. I guess I'm a little hesitant because if MicroStrategy goes or Bitcoin goes on a roll and strategy follows, being a levered play in Bitcoin, we definitely don't have any upside protection, which I guess we get more of a premium because we're not spending any money to buy upside protection. But you can see everything's below the x-axis. As far as what we were looking at previously, that's how we were doing it previously. And we had calls. This is from yesterday at 335. Misty's at 342. So maybe maybe it's a good idea because I don't think we would have bought calls. We would have hit it. So maybe it's a good idea. That said, we did blow by these so it's 342. So we're looking at like right above here. So yesterday, I mean, we had a lot at 340. We had a decent amount at 337 and 335. Today, as far as what we did, let me just take a note of that. So we had some at 335 and 337. You can see today we got some at 342.50. So we clearly bought all those back. And then it looks like we sold some new ones. Looks like we're out to 370 and 375. So we are out a ways. But I'm guessing the team right now, we got all these that are expiring today. I guess MicroStrategy is down a bit today. So it's down to 342.50. You got this one at 347.50 and 345. That I guess currently, if it ends where it is today, these would be worthless. So for that reason, Misty is actually kind of outperforming MicroStrategy because we weren't really getting any credit, or like we were capped here and the stock price was at 349, but as it's fallen, it's taken these ones and basically made them worthless. And the lower ones we've already moved, so maybe it'll turn out to be decent. But yeah, I guess Misty, the main thing I pull out of here is that they're just selling calls. But the other thing to look at, so when they move these and they moved them up to here, like how did that impact the fund? If you go and you want to track the different components, let's see like the last 2 weeks of data on the Misty fund, or last 2 weeks or so, I clicked roughly 14 of these, maybe a little more. But you can see recently, I guess the good thing about Misty going up is our synthetics definitely doing better. It's not a big drag on the fund. As far as moving those contracts, it looks like we used some cash. So it went from 16.79 to 16.48 per share. I mean, I guess that's a pretty good trade-off because your synthetics definitely going up by more than your cash is being used. This, of course, was as when I pulled the data. Doesn't necessarily take into the dip right now. We'll see that once I load the data for tomorrow. But yeah, I guess Misty overall, they're using some money to move their contracts at the MicroStrategy underlying. Stock price went by the strikes that they sold, so they had to restructure that. But overall, the synthetic went up by more, so the overall fund price, of course, which takes into all three components, was on the upward move. But that's a look at Misty. Once again, we're continuing just to sell shares, just straight selling call options, no credit spread method employed. So we'll look to see how that does. I don't know if they're planning to try to pay a pretty good distribution or something, or try to keep that distribution over $1 and try to increase their premium. But as far as their cash positioning, if we're using cash to restructure items, yeah, I don't know. Looks like Misty for a while, we've just been using cash. Of course, a lot of that was because my strategy, the stock was going down, so we had to restructure the synthetic to get it back up. So it wasn't a super drag. We were using cash to do that. Now the synthetic's getting higher. Yeah, I guess let me know what you think. But that's what's happening for Misty. NVDY, that one, of course, just had a good day or so because I guess it announced that partnership with Intel, which basically brings Nvidia into the PC market. But as far as positioning, stock price, it's up again today, 177.50, so a little higher than my stock price here that I had from this morning. Maybe I'll zoom out a little bit so I can get the whole chart in. Playing with it a little bit. There we go. So I guess here's what we're looking at right now. We got some new contracts, 926. Or I guess here's what we were looking at before. We guess we had some contracts yesterday at 926 as well. We also had the 180, 14,130. You can see right now the 118, we got 13,130. So we bought some of those back. Yeah, I guess a lot. We got a few that are expiring today, but most of the time, this is what 926 is looking at from your positioning. We got a stock that's at 177 and change. So it's already by this 175 strike. But we got the 177.50 and most of them at the 180. Then we do have a lot bought, starting pretty close, 182.50 all the way up to 190. Nvidia has been doing a little better. You can see their synthetics up. I know the stock price has gone up. And as far as how their synthetics structured right now, so they've sold most of what they can. They still can sell calls on their 7,000 contracts. So you can see where they put those. So they'll probably be selling more. They're going to sell 7,000 contracts, and the ones that expire today, they'll also have the ability to sell contracts against those. Unlike Misty, they are, of course, using the credit spread method on basically everything they sell. That's the main thing for Nvidia. If I take a look at their cash position, I don't think they had to move a ton. I don't know if they did move, it wasn't necessarily moving a contract that had a strike price that was way under the current stock price, or a strike price that was way under the current stock price. So if we look at it from a funding, I mean, their cash was on 9/11, 15.26. Now we're at 15.34. So it looks like they're adding to their cash value. And their synthetics going up, so all is looking good for Nvidia. And then I guess jumping to Coney. So Coney is, of course, the biggest item in Group C. Jump to that one here. So Coney from a fund, it's been a pretty flat fund recently from both shares outstanding and market cap. We can see yesterday, looks like they had their 919. And then today they did sell. Looks like they sold some contracts at 360. Coinbase currently at 343, just as a reference. They sold some at 360, 365, and then they bought at 380 and 385. Stock price is 343 right now. So about right where this, it hasn't moved much. So you can see like the morning ticker, it's about right where the dotted line is. So we got a couple contracts that we're going to have to buy back and move, but that shouldn't cost too much because the stock price is just barely buy some of them. Assuming no movement, which is a big assumption, but if there was no movement, all these basically in blue here would expire worthless. Yeah, I think that's the main thing I'm taking out of here. From their fund makeup perspective, Kony's been doing a little better, so we do got some synthetic value. That said, ETF price, of course, higher than the cash value because of the synthetic. How their synthetics used right now, they have everything sold. They got 100% credit spread method employed. A lot of their contracts, as I noted, if there's not a big movement in Kony, or not Kony, but Coinbase underlying equity, a lot of these will expire worthless and give them the collateral to sell them out in the future. So it'll be interesting to see what strike prices they pick up, maybe on Monday or Tuesday, as far as how the fund's doing. So recently, and I'm starting to get a lot of data points. So sometimes you want to take the all away and just select the last 10 or 14 or 20 or so, give you a look at it from the last week or so, or last 2 weeks. Mainly what I see is, so this is Kony. So their cash has been going down, possibly buying back some of the call options that the stock's gone by, restructuring those, but the synthetics actually up. So you can see cash is down 649 to 639, so about 10 cents, but the synthetics up 40, 45 cents. I guess overall for the fund, it's good. We're using some cash to restructure some of the contracts that we sold, buying those back, reselling them at higher strike prices, but using the net cash to do that. But the synthetic we have, which we had the synthetics at 300 and 320. So the Coinbase is clearly past the synthetic. So you can see the synthetic price has actually been doing pretty good, which has been a net positive for the fund overall. I guess that's my conclusion from that. And then Tesla is one I want to touch on because, of course, it's a pretty big fund, but then it also has been doing pretty good lately. Or the underlying equity is actually doing really good lately. If you want to take a look at TSLY. So this is probably not a good chart because it only pulls in what it was at September 4th. So it's been on quite a run lately. This just basically pulls in the last time it paid a distribution. So maybe going to Yahoo Finance would probably be better, but the Tesla stock's been doing quite well lately. You can see it's at 424 right now, so up another 1.75%. As far as how the fund has been doing, you can see the market cap, without the shares necessarily increasing a ton, even declining right here, you can see the market cap's been taken off, which means the underlying equity's been doing quite well. But as far as how Tesla's structured, we did have a lot of contracts. What are we at? 423. So we had them sold out to 427.50. So it's looking September 19th. A lot of these contracts might expire worthless. Did they move anything? No, it's basically the same today as it was yesterday. They're just letting these contracts roll off, and then they'll probably sell new ones going into the future. They did have 100% credit spreads. Those were not employed, but we might basically take in all that option premium, assuming the share price doesn't zoom up to 327.50, which it's currently below. My notes, I just have market cap up, and then I haven't noted that they cashed out their synthetic. So I take a look at these beforehand, see if there's any kind of big events going on. But if you look at TSLY over the last, I'm going to say about 2 weeks, maybe 2.5 weeks, click all the buttons in order to do that. So you can see as far as how the stock's been moving. So every time cash goes up, it usually means we're cashing out of synthetic. So you can see that Tesla stock's been doing pretty good. You can see it got pretty high here in the synthetic. Then it looks like right here, they cashed it out in September 4th. And then basically the synthetic was back down. And then over the last couple of weeks, the synthetic once again gained quite a bit. And on the 16th, big cash out. It went from $7.08 all the way up to $8.79. So a big cash out, but I guess that did take your $1.66 in synthetic value back down to 14 cents in synthetic value. But hey, your cash position's up quite a bit. TSLY fund's been falling along and also doing quite a bit. If we do select all, we do see the ETF price was in the 750s. At one point at 746, we're all the way back to almost $9 a share. So clearly that's all driven by the underlying equity going up. As the synthetic would gain value, boom, cash out we'd cash it out. Let's see, it was group A, so it did pay a distribution, but then it's boom, cash out again. So the fund's sitting with a lot more cash than it had previously. And yeah, I guess interesting. I guess this is definitely a pattern for what would happen when you got a YieldMax fund with a synthetic and the underlying stock price goes up quite a bit. You get the synthetic to gain, And then randomly, whenever the fund team decides, they will probably cash out the synthetic. What that means, they take the strike price in the synthetic and basically move it to a higher strike price and take in cash by doing that. And then if it keeps rising, you do it again. You just keep taking out cash, which you can then use to pay the distribution. And it also gives you extra collateral. So in the future, you can write more contracts. But yeah, that's interesting. I'm trying to look what the TSLY. So the last distribution they paid was 39 cents on the 4th. So I'm just looking at, I want to see their, so on the 4th, so it was declared on the 4th, so then it was paid in this area. So you do see a slight cash decrease, 48 cents to 42 cents. So they paid their distribution. They must have cashed out some of their synthetic again to not paid out like 40 cents, but I don't see it necessarily dipping by 40 cents. So I'm guessing they cashed out some of the synthetic in this area too to even make it so you can't even hardly even see the distribution in terms of their cash yield. Interesting. Most funds, especially the funds that pay out a huge distribution, Huey, for example, it's paid out a couple of really big ones. PLTY would probably be another one. But if we go to Huey and we take a look at the fund positioning, you can see like right here where they pay out a distribution. And let's see, Huey's Group C. So yeah, you can see right here, you can see their cash. I'm trying to remember. You can see they went from $61.71 down to $58.05. So that was clearly a distribution payout. It usually lines up pretty closely to what their distribution was. You can see that's $3.86. So boom, their cash went down by $3.38. So you can usually see it on the chart. But TSLY, you don't see that like 40-cent decline. So they're cashing something out. I like to look at those charts. I think they give you some insight to what the fund's doing. But there's a quick update on the top 5. Thanks for tuning in.